The trading goods deficit with China is down 12.8% the first 9 months of 2019, or $38.5 billion as trade talks continue. Hello, this is Robert Romano, Vice President of Public Policy with Americans for Limited Government, dailytorch.com. Hit that subscribe button. Today we're going to be talking about the U.S. trading goods deficit with China. It's way down in 2019 for the first 9 months through September. By about $38.5 billion. And this is proof that President Trump's tariff regime against China is working. It's brought China to the table. They have an agreement in principle right now that's being supposedly finalized right now. And we're going to see if China and Beijing actually want to follow through on what they've committed to. We've had past hiccups just earlier this year in May. China reneged on practically the same deal. And so there is some skepticism and I think some right to be a little bit cautious in analyzing whether or not Beijing is following through. But in the meantime, the trading good deficit number is way down. Again, 12.8%, $38.5 billion. And that's compared to 2018. And according to the latest data from the U.S. Census Bureau, now that's come with 10% tariffs on $200 billion of goods and 25% on $50 billion worth of goods that President Trump had put into place on Chinese goods. And that was until May when he raised the tariff to 25% for all of the $250 billion. Again, in May, China had reneged on a previous trade deal. And so in July, Trump added another 10% tariff on the remaining $300 billion of goods, bringing it to a total of almost $550 billion of goods that were being taxed. Now, the trading goods deficit reduction of $38.5 billion as of September was where things stood when this agreement in principle came along. Now, the Wall Street Journal is reporting on a setback in the trade negotiations. Ahead of, there's supposed to be a signed agreement this month. Tariffs on China imports emerge as hurdle to trade deal. And we've heard this before. This was the same issue that came up in May when China reneged on the deal. They want the U.S. to get rid of all the tariffs. They'll agree to all of the provisions of the trade deal, but then they'll come back afterwards and say, but now you got to reduce the tariffs. Trump is saying and has been saying, we'll reduce the tariffs when we verify that you're doing everything you're supposed to on currency manipulation, forced technology transfer, intellectual property theft, at the financial services provisions. When we see on our side, the U.S. side, any progress by China to actually comply with the terms of the trade agreement, well, that would be the point where you would bring the tariffs down. China's saying, just get rid of the tariffs and you can trust us. We're going to follow through on the trade agreement. So in this case, I think that the Wall Street Journal, they should probably look a little bit closer at what President Trump is saying. But here's what they're reporting on the so-called logjam. Quote, the logjam centers on whether the U.S. has agreed to remove existing tariffs in the so-called Phase 1 deal that the two countries have been working towards, or whether the U.S. would only cancel tariffs set to take effect on December 15, according to people familiar with the talks. Now, for the uninitiated, this is China once again moving the goalposts. Again, we've seen this before in May when they were reneging on the deal. According to Reuters, and this was a report pretty much at the 11th hour where the Chinese were reneging on the deal. China exclusive. China backtracked on almost all aspects of the trade deal, sources. And according to the report, quote, in each of the 7 chapters of the draft trade deal, China has deleted its commitment to change laws to resolve core complaints that caused the United States to launch a trade war in the first place: theft of intellectual property and trade secrets, forced technology transfers, competition policy, access to financial services, and currency manipulation. So that was an unacceptable situation in May, and I think it would be an unacceptable situation today if they were to renege on the deal again. Now, President Trump, he's spoken on this impasse on November 12th at the Economic Club of New York in a speech, and he said, quote, "We had a deal. This gentleman can tell you we were so close to a deal. The hard points were negotiated, opening up China intellectual property, all sorts of tremendous penalties, and then one day we get a call. 7 months ago, we get a call. They'd like to see us, and we saw them, and they explained why they can't do 3 or 4 things they had already signed on to." And I said, okay, hey, look, I'm in the real estate business in New York. I've heard that before. Sadly, it wasn't like, oh, gee, I'm so shocked. But I was a little surprised. You know, it's China. They're not supposed to do that, but they did. And I'll tell you what, I'll bet they wish they didn't do it. Then I put 25% tariffs on everything coming in on the first $250 billion of product. So with no deal, the tariffs were at 25% on 250 billion. Now with the deal, Trump is saying it's going, if we get a deal, if they follow through, he says, okay, I'll lower that down to 15% very soon. But take note of that number, because that's actually a greater amount of tariffs that are going to have to be paid now as a result of China waiting. So it used to be 10% on 200 billion and 25% on 50 billion. That adds up to 25 billion in tariffs on the $250 billion of goods. But now Trump is saying that if a deal is made right now, the tariffs will only go down to 15% on the 250 billion. And that comes to actually 37.5 billion instead of just 25 billion. And it keeps getting worse for China the longer they wait. Trump's now threatening to increase the tariffs even further. And they've lost another $12.5 billion just because they thought the U.S. would fold when they reneged on the trade negotiations in May. Here's what Trump says, and I tell this to Larry, I tell it to everyone, quote, "If we don't make a deal, we're going to substantially raise those tariffs. They're going to be raised very substantially." And so I think that's perfectly clear. It might not be clear to the Wall Street Journal, who again is reporting that there's a dispute about whether the tariffs are coming down. Trump is being very clear. The tariffs aren't coming down until China is complying with a trade agreement with the United States. That's the whole point of the tariffs. And we've been following this issue for many, many moons. The U.S. trade manufacturing market share worldwide has been declining from 13.4% to 7.5% from 2001 to 2017. 2001, that's when China entered the WTO. In the same period of time, U.S. economic growth has dropped off. It hasn't grown above 4% since 2000, not above 3% since 2005. And labor participation amongst working age adults has been precipitously declining. It's recovering now in the Trump administration. And I think that has a lot to do with the tax cuts, deregulation, and frankly, better trade deals. In the meantime, China has dramatically increased its global manufacturing market share. They rose from 5% to 16.6% in 2017, although it's worth noting that their global manufacturing market share actually peaked at 18.8% in 2015. But the way they were able to accomplish that was through massive currency devaluation with the yuan, beginning in the 1990s, and then with the World Trade Organization plus most favored trading status that Congress enacted in 2000, there's been a miracle economic boom in China that's really benefiting them, but not so much us. We're losing manufacturing market share, and we're losing labor participation. Middle America is getting hollowed out. I think that's why President Trump won the election in 2016 in Rust Belt states like Pennsylvania, Ohio, and Michigan. And that's kind of a core constituency for Trump of conservative households and union kind of Democrat households in those Rust Belt states that probably is going to come to play again in 2020. And so Trump's not about to go soft on China. He's saying, I need to be tough on China. And so he's going to try to get as much compliance out of China, I think, as possible. Now, in June, the first month of the increased tariff, imports from China actually dropped 0.7%. The same thing happened again in August, a 0.77% drop. And going back to 1985 with data, imports have not dropped in the month of June ever. They're usually going up because it's summertime. And they usually increase in August too, with certain exceptions, including in 2019. The amount of the drop again in August was 0.77%. Now, overall imports from China are already down $53 billion this year alone, and at the current pace, the exports to the U.S. could drop as much as $72.5 billion. That's $72 billion that China will be losing. That's a 13.4% drop for the year so far. And and the way I'm calculating that is just by carrying 13.4% through the end of the year, the last 3 months there, the final quarter. Now, that amounts to a half a percentage point of China's 13.6 trillion gross domestic product. So I think that's fairly significant. If you start on a nominal basis saying we're going to take away a half a percentage point of your economic growth, that could put any country into a recession. Now, U.S. goods exports to China, they're also being dropped. They're down 15% or 14.5 billion. We don't export that much to China comparatively, though. They export hundreds of billions of dollars worth of stuff to us. We export comparatively less, and so the hit on exports right now is only 0.06% of the 21.5 trillion nominal gross domestic product. So China has a far more to lose in this fight. And I'll leave you with the close here because I think the U.S. is winning and President Trump is putting America first, and that's why we're winning. From the U.S. standpoint, the overall savings so far in 2019 of $38.5 billion on the trading goods deficit with China is $38.5 billion less that will be subtracted from the U.S. economy when the GDP numbers are factored. Trade deficits are subtracted directly from GDP. So if you can do exports in surplus, you'll boost your economy. That's why China likes to do it so much. That's why their economy has been growing so dramatically in the past many years, since the year 2000 and 2001 when they entered the WTO. And so it's time for Chinese President Xi Jinping to choose deal now or deal later. But it's going to keep getting worse if they keep waiting because Trump is just going to ratchet up the pressure. That's the commentary. This is Robert Romano, Vice President of Public Policy with Americans for Limited Government, dailytorch.com. Hit that subscribe button, ring the bell for notifications, and have a good day.